Hey everyone, welcome back to our channel, where we break down the latest financial news and trends for you. Today we're diving into some exciting financial news from the February 2025 CPI inflation report. This report is crucial as it gives us insights into the current state of the economy and helps us understand where things might be headed. So buckle up because things are looking up for the markets. There's a lot to unpack, and we're here to make it simple and engaging for you. First off, let's talk about the headline inflation rate. This is the overall rate of inflation including all goods and services. It came in at 2.8% for February 2025. This figure is a key indicator of the general price level in the economy. This was slightly lower than the 2.9% economists had predicted. While it might seem like a small difference, it can have significant implications. Now you might think a 0.1% difference isn't much, but in the world of finance, it's a pretty big deal. Even minor deviations can influence market sentiment and economic policy. Next we have the core inflation rate. This measure excludes the more volatile food and energy prices, providing a clearer picture of underlying inflation trends. This excludes the more volatile food and energy prices, and it was at 3.1% for February 2025. This rate is often considered a better indicator of long-term inflation trends. Again, this was lower than the anticipated 3.2%. Such deviations can affect everything from interest rates to stock market performance. So both headline and core CPI were below expectations. Nice, right? This could mean more stability in the economy and potentially lower interest rates. Now let's look at the monthly changes. These figures help us understand short-term trends and can indicate whether inflation is accelerating or decelerating. Both headline and core CPI rose by 0.2% in February. This modest increase suggests that inflation is not spiraling out of control. Economists were expecting a 0.3% rise for both, so this is another win for the markets. Lower than expected inflation can ease concerns about aggressive monetary tightening. It shows that inflation is cooling down slightly, which is a positive sign. This could lead to more favorable economic conditions in the near future. But there's more to the story. We need to consider other factors that could influence future inflation. The report also mentioned concerns about the potential impact of tariffs on inflation. Tariffs can increase the cost of imported goods, leading to higher prices. So, while the current numbers are promising, we should still keep an eye on how tariffs could affect future inflation rates. It's a factor that could change the economic landscape. Now let's talk about the market reaction. How did investors respond to this report? Dow futures jumped 350 points after the release of the report. This surge indicates strong investor confidence. This signifies a positive market response to the lower-than-expected inflation figures. Investors are hopeful that this trend will continue. Investors are feeling optimistic, and that's always a good thing. Optimism can drive market performance and lead to better investment opportunities. Alright, so what does all of this mean for you? Whether you're an investor or just someone interested in the economy, these numbers matter. If you're an investor, this could be a sign of more stable times ahead. Lower inflation can lead to more predictable returns and less market volatility. Lower than expected inflation can lead to more cautious optimism in the market and potentially better returns on your investments. It's a good time to review your portfolio. In summary, February's CPI inflation report brought us some good news. The lower than expected figures are a positive sign for the economy. With both headline and core inflation rates coming in lower than expected, and a positive market reaction, it's a time for cautious optimism. But remember, always stay informed and be prepared for any changes. Keep an eye on those tariffs, but for now, let's enjoy the good news. It's a reminder that the economic landscape is always evolving. Thanks for tuning in, and don't forget to like, subscribe, and hit that notification bell for more updates. See you next time. Stay informed and stay ahead.